Today we're breaking down the July 2025 investment disclosures from three prominent members of Congress: Michael McCaul, Nancy Pelosi, and Ro Khanna. We'll explore their recent trades, sector bets, and what their moves might reveal about broader market trends. Members of Congress sit in a unique position. They have access to high-level briefings on national security, regulatory changes, economic forecasts, and upcoming legislation, all of which can shape entire industries. They might not be told outright by this stock, but the information they receive allows for educated guesses long before the public, or the market, catches on. For example, if a committee hears about. Another layer of controversy is the wealth gap. A rank-and-file member of Congress earns $174,000 a year. Leadership earns slightly more, yet many lawmakers have net worths in the tens of millions. How? A mix of well-timed investments, spousal business ventures, lucrative speaking engagements, and post-Congress lobbying roles. The median net worth of a lawmaker is more than 10 times that of the average U.S. household. And when their portfolios outperform the market, the public inevitably asks questions. An impending military contract, defense stocks might suddenly look like an attractive buy, even before anyone else knows why. Michael McCaul, Republican from Texas and chair of the House Foreign Affairs Committee, has a history of holding large stakes in Chinese tech giants like Alibaba and Tencent, while sitting on a committee that directly handles foreign tech and national security issues. In July 2025, he disclosed buying $50,000 to $100,000 of ASML, the Dutch semiconductor manufacturer critical to advanced chip production. The company's stock recently dipped after lowering guidance, but with AI demand accelerating, ASML's high-margin, cutting-edge machines could see renewed demand and potentially boost profits. McCaul also purchased $50,000 to $100,000 of Broadcom, another AI-linked play that's been a congressional favorite and a major beneficiary of the same trends driving NVIDIA. Both investments suggest McCaul sees room for AI enthusiasm and revenues to grow further. Few lawmakers' portfolios are watched as closely as Nancy Pelosi's. In 2024, her household posted an astonishing 71% return, outperforming nearly every hedge fund in America. Much of that came from well-timed positions in Palo Alto Networks, NVIDIA, and Broadcom, and it doesn't hurt that her husband is a seasoned investor. In June 2025, Pelosi exercised roughly 200 call options on Broadcom, her only trade for the quarter. Broadcom has been one of the largest winners from the AI boom, thanks to its role in building the infrastructure behind it. By exercising and holding instead of selling, Pelosi signals she believes the rally has more room to run. Ro Khanna, also from California, had a busier quarter. He traded more than 50 stocks, but his largest moves were all in the banking sector. In July 2025, he purchased shares of J.P. Morgan, July 7th, Barclays, July 2nd, Canadian Imperial Bank, July 31st, and Bank of Nova Scotia, July 9th. The results so far are mixed, with Barclays up 11% and the others near break-even. The pattern suggests Khanna is positioning for potential interest rate cuts, which could make borrowing cheaper for banks and boost their profits. Banks make money from the spread between what they pay depositors, savings accounts, CDs, and what they charge borrowers, loans, credit cards, mortgages. When rates go up, loan rates rise faster than deposit rates, so the spread and profits can widen in the short term. Example: a bank charges 7% on loans while paying depositors 2%, 5% margin. Higher rates make borrowing more expensive, so fewer individuals and companies take out loans. This slows new lending activity and can reduce fee income from loan origination. Bottom line: high rates can help bank profits at first, due to wider margins, but eventually slow lending and raise default risks. Low rates compress margins but stimulate loan growth, improve borrower health, and can boost the value of banks' investments. July's disclosures from McCaul, Pelosi, and Khanna showcase three distinct strategies. McCaul, betting on the semiconductor backbone of AI. Pelosi, doubling down on AI infrastructure leaders. Khanna, anticipating a favorable shift for global banks. Whether these trades reflect sharp market instincts, policy foresight, or exceptional timing, They underscore why congressional investing draws such intense public attention. When lawmakers' financial moves align with emerging economic trends, often before those trends are widely recognized, the real question becomes not just what they know, but when they knew it.